Good afternoon, everybody. This is Wavette Johansson. I am your third VP of Education for CAREB, and we are here once again for our CAREB Hour of Power. So as you all know, we meet the second and fourth Wednesday of the month at noon, and we bring on you guys special resources to help you guys to build your business. So Realtors Nation, I have a great surprise for you today. Our guest speaker, he's somebody that you guys should know. He's our past president of ARPB down here at the Oakland chapter, Mr. Eric Harris. And you may not know that Eric Harris is not just a realtor. He's also, you guys, owner of a property management company. And so I want you guys to come on today, you guys, to share how he's able to have different streams of income within the real estate profession, and how can people, use his services, you guys, to help build your business for you and your clients. So, you guys, I am very pleased to bring on our very, very special guest speaker for today, Mr. Eric Harris. Hello, Mr. Harris.
Hello, Wavette. How you doing?
I'm doing awesome. Good to see you.
Good to see you as well. I just finished golfing, but that was all part of my plan.
All right. The floor is yours.
Do you have questions for me, Wavette, or do you want me to just share about property management?
I want you to share, and then we'll have people ask questions. Okay.
Okay. So my story is, I was a sales agent for Better Homes Realty in Oakland, and then I became a broker about 7 years ago. And while I was working for Lynn Worthington, I started doing some HUD cases where he owned Maisel Property Management, and we would have to go in and negotiate with tenants who weren't paying rent and lived in the property. So there were some exciting tales then. I wasn't packing, but in a couple of cases I probably should have been. But that was my introduction into the property management business. Fast forward, so Lynn was the owner of Maisel Property Management, and the guest Walter Merriam, we called him Mr. Lee, was the property manager. He actually did the boots on the ground. So Mr. Lee reached retirement, and he wanted to retire. So Lynn approached me about purchasing the business, which I did. So I bought the business in 2018 and have been operating it ever since. So I had, it was an existing property management company. So I had, had a big learning curve. We had about 200 clients, about 150 clients. And, I started with some help. I hired a couple of people. And the property management business is really, it's two-pronged. Really three. First is tenant. So when owners have, I just got a call yesterday, I actually have a meeting today, a new client who wants me to rent out their property. So people who have rental property and they want to rent it out. So I call that tenant placement. It's called tenant placement. And for example, I charge 1 month's rent for that. So that means that once the property is ready to go, we get the keys, I send in a professional photographer, take pictures, and then we put it on our website, Maisel Property Management. We have a very robust website, and I put it on the MLS, and it goes to all the major websites. And then we start showing the property. We vet the tenants. They go through our credit process. They pay $30 per applicant over the age of 18, which basically pays for the credit check. And then we vet the tenants. Once I find a tenant that I think is good, then I refer it to the owner. The owner makes a final decision. We collect 1 month's rent and a deposit equal to 1 month's rent. And the first rent is our fee. I also charge a non-refundable $500 fee for that. So if you give me a property, I'm going to charge you $500 to do all the work that we do to set it up, whether we rent it out or not. And hopefully we do rent it out. So that's tenant placement. And then the other is complete management. My management fee, we have some old clients who are pretty low, but my management fee is 9% of the gross rent. And that's for complete management. We do everything. So we collect the rent. We do rent increases. We send out monthly and annual expense statements. We send out communications to the tenants if there are problems. Tenant just called yesterday. Hey, the other tenant's parking in their spot. So we're going to have to address that. So it's a lot of issues that happen every day. So with a letter or phone call, those are the main thing, rent collection, rent increases, regular statements. We're looking at the profitability of the unit and maintenance. One of the things, I'll give you one of my secrets that most management companies don't do is, I was in the military. I was an officer in the military, and we have what's called preventive maintenance checks and services. So that's when we regularly inspect our vehicles, our weapons, our tracks, and we go through and make sure they're fully functional. We don't just do it when something breaks down. We do it on a regular basis. Thus, preventive maintenance checks and services, PMCS, we called it. So I do that with my clients. So I do regular inspections, which I charge them for. It's $50 per inspection, in addition to the management fee. But that's gold for the owner, making sure the owner, this is their asset that they want to perform on into the future. So we're looking for leaks. We're looking for evidence of past. We're looking for, does it look like more people live in the unit than are on the lease? We look at the general condition of the property, sloping floors, not so much foundation issues. Are they maintaining the property? Do all the smoke detectors work? Carbon dioxide monitors work? The basic things, refrigerator, stove, everything has to work. So we do that as part of maintenance. In the last phase, as I was a football player, so there's 3 phases of the game of football: offense, defense, and special teams. So you got to be effective in all 3 of those areas. So to run a good property management company, you need to be effective in tenant placement. You need to be effective in maintaining the property, which is huge. Most people don't want the headache, and most people who have managed their properties by themselves and then get property management wonder why they didn't do it sooner. Because we deal with the problems. It's not like representing buyers and sellers, which is the 3rd phase. You can love them and leave them in real estate, and every one of us has done it. Close the deal, never talk to them again. Well, it's not the best thing to do in real estate. You should keep your clients. You should service them. You should communicate with them. But with property management, like I'm talking to you right now, but my staff is dealing with problems right now. So we deal with problems every day. So you have to have an affinity for being a problem solver and be cool. My son is in the business. He's a natural. He was a linebacker in high school. He's actually ferocious, but he's very calm. And you push him to a certain limit, you'll find a different person. But he's very good for the business. You have to be able to deal with a lot of problems and be calm about it. Mr. Lee taught me, who was my first mentor in the business. We were getting sued by someone, and I was upset. I was like, "Hey, this tenant is ridiculous. You haven't paid the rent. They're suing." And he told me, I'll never forget the line that he said, and most people can't understand it or can't fathom it. It's like the parable of the rich man with the sword. When he hires people in the morning, and bottom line, he pays the same amount to people who work 3 hours as he did to people who work 12 hours. Most people don't understand that story. They think it's unfair. But the moral of the story is he can do whatever he wants to with his money. And who are you to tell him what you can do with it? So anyway, as it relates to tenants, you've got to be able to, Mr. Lee told me, "Eric, you need to calm down." He told the lady, he said, "Ma'am, I'm sure if I was in your situation, I would do exactly what you've done." I'll say that again. "Ma'am, I'm sure if I was in your situation, I would do exactly as you have done." That's empathy. You got to be able to have it. You got to be able to relax. And then he pulled me aside and said, "The tenants are the reason why we have the business. They're the ones who pay the bills. The rent's coming in every month, or would pay the commission. That's what pays us. So respect the tenants." And during the pandemic, I learned most people think, "Oh, people don't pay their rent." Most people pay their rent. Over 90% of all of our tenants pay their rent. So people want to have a place to lay their head. So anyway, that's about the kind of the state of mind that you have to have. In the 3rd phase I mentioned earlier is representing buyers and sellers. So a lot of our sellers, sometimes they want to sell their property. Sometimes they want to buy other property. So I'm a broker, so I represent them. I'm a broker associate with Better Homes Realty, but I'm the broker of record for Maisel Property Management. So I represent buyers and sellers, my existing clients, and other people who want to buy rental property and they want us to manage it. That's what I want to present about property management. That's kind of it. I gave you some of my secrets. Most of you will, and one of the things I'm most happy, I don't like pride, but one of the things I'm most happy about is when I became the president, not that many people were property managers. By the time I was finished my 2-year term, I know our state president went into property management. Randy Munman went into property management. A lot of our leaders, it's a great business. Got to have the bandwidth for it. You got to be able to handle it. But it's you're not just getting paid when you close a deal. You're getting paid when you rent a property out. You're getting paid when the tenant pays their rent every month. It's more consistent. So it's a great way, as Wavette said earlier, it's an additional stream of income that helps, maintain, you to maintain the business.
That's my favorite thing. Yes. Eric, what kind of trends are you seeing in the rental market right now?
I am seeing that some of our properties are taking a little bit longer to rent, but we just got 2 qualified tenants. We just rented out 2. They'll be moving in, actually 3, on July 1st. But you have to stick with it. So rents have gone down a little bit, and the reason why I think is because during the pandemic there was a lot of construction. So if you walk downtown Oakland, I was with my wife downtown Oakland. We went to a Mexican restaurant. I think it's on say Webster, or it's not Harrison, but anyway. She was like, "Where are we?" The skyline has changed with all the new construction downtown. And so during the pandemic, they thought that doctors, lawyers, and Indian chiefs were going to all live downtown. But then some of them found out they could work from home, and they bought houses in Sacramento or Fairfield or Modesto, and they could work from home. So there was a lot of inventory, and there still is inventory. So now a Section 8 tenant who would have rented our unit now is looking at a brand new 2-bedroom unit, walking distance from a bar and Whole Foods. So it's the market has changed, and I call it slumming. The people who weren't looking for Section 8 tenants before are looking for Section 8 tenants now. Some of the tenants that we had, now they're living downtown. So the market, that's affected the market. That has made more competition, and rents have gone down a little bit.
So what would you say is the type of property that's in higher demand? Is it the condos? Is it multi-units? Is it just residential property? What types of properties do you see are in the highest demand?
Are you asking for sale, or are you saying for rent?
For rent.
Our hottest properties are, houses always are hot. People like, we have a 2-bedroom home that, 3 people wanted. We picked another tenant. A house that I'm actually selling, the owner is moving into that house, and we're going to fix this house up and put it on the market. But houses are always hot. Usually 1-bedrooms are pretty hot too, but 1-bedrooms have cooled off a little bit. I think because of the competition. But I would say homes are the hottest, renting homes, not apartments.
Okay. And what do you think is the landlord's biggest concern right now in the rental market?
Oh my gosh. One of the biggest concerns, I just had to call one of my fellow agents, brokers at Better Homes, called me at like 7:00 last night and asked me what the rent increase is. And the rent increase, if you don't know, for Oakland, starting August 1st, is 0.8%. I'll say that again. It's 0.8%. So if you send somebody a rent increase letter today, it can't go into effect until August 1st. And as much as for August 2025, you can go up to 0.8%. So that's pretty low. So, owners in Oakland are concerned about rent control. Rent control is, Oakland and Berkeley, we're rent control cities. So does it mean that people aren't doing business? Some aren't, but our rents still are relatively high compared to other places in the country. So, but I would say rent control, bad tenants, if you get a bad tenant who's going to sue you for, I had a tenant who was applying for a property, and her IHSS worker called me and said, called me and said, "Hey, you don't want to rent to her." When she gets in the unit, then she sues for, she breaks up the unit and then sues. So I would say that's the biggest fear for most owners, is that they will get into a lawsuit if, they have a bad tenant who will play games.
Okay. We have a question from Mr. Will Wheaton.
Good afternoon. Mr. Harris, what is the most common multiple that you're seeing for valuation of a property management company these days?
For the value of my company, you're saying?
For the valuation of a company in general, what is the most common multiple that you're seeing?
The gross rent multiplier?
No, I'm asking, if you're looking at buying a property management company and figuring out what to offer for it, with the income that's the revenue that's coming in from the rents, there's typically a multiple applied to that to derive a value for the company. So what is the most common multiple that you're seeing in the market? If you know, for valuation of a property management company?
Well, I would answer that in the way that my company was valued when I bought it. The gross rents for 1 month was the valuation of the company. So if you manage 100 units, and each of those units is, all those units are bringing in $1 million a month. I'm using that number. Then
I get
roughly, I would say it would be $1 million.
Got it. Okay. All right. Thank you very much.
Thank you. We have a question from Ms. Sylvia Young.
Good afternoon, Eric. Do you have a crew? Do you also hire a crew of people to make the repairs, or do you just contract that out on an as needed basis?
Yeah. All the people that work for me, well, I have employees. I mean, you're talking about repairs. So all the people that do repairs are independent contractors. So they're their own handyman, they're their own licensed general contractor. But a lot of the checks that I write are to the same people because I use them repeatedly. So they're not my employees. And sometimes I have to remind them of that. Hey, I need some work. And I like to say, well, hey, I need $1 million in my account. So we're all businesses, but a lot of them do repeatedly get, checks from, the property management company because they do a lot of work, but none of them are my employees.
Okay, thank you. We have a question from Dr. Ethel Sims. Dr. Ethel?
Hi, Eric. Hello, everybody. I'm trying to remember the name of the form that took effect in 2023, where now when you have an agreement with the lease agreement with the tenant, you also have to tell them whether you are exempt as a landlord or you fall under it's like a 2-page document now that we have to give them. The total housing exemption that actually talks about whether you can evict them based on cause or the fact that if you wanted your property back because you want to renovate it or you want to have your own family move back in. Do you remember that?
Well, there's no form that I give them. There's a new form that asks the tenant, they can, well, it may not be what you're talking about, but there's a new form where the tenant, it's called a credit reporting form. So the tenant can say to me, hey, I'm a new tenant, and when I move out, I want you to be able to tell whatever creditor or bank that I'm thinking about using to buy a home, what my rent, how I paid my rent. And if they do say yes, then I can charge them an additional like $15 a month to report on them, or they can say, no, I opt out and I don't do it. That's what most people do. If you're talking about an owner move-in, like I'm doing an owner move-in right now with it was actually one of my handymen, one of my plumbers, who was a tenant in one of the properties that I managed, bought a duplex, and now he is doing an owner move-in. And all that was required to do on the owner move-in was he had to give them a 60-day notice. He had to, the rent adjustment program has a schedule of payments based on a 1 or 2 or 3 bedroom. He had to pay them half of the amount that the city of Oakland mandates. And then when they move out, he pays the other half. But there was no other form that he had to sign for that. So if there is, I'm unfamiliar with it.
It's something called Just Cause. I just did it last week.
Oh, Just Cause for eviction. Well, that's a standard. That's on your California rental lease. Every lease that I sign has the Just Cause for eviction form. I mean, that's part of the lease. So it's just letting them know what their rights are in California and in Oakland. So okay. I think that's the form you're talking about.
Yes.
Yeah, that's part of when you go to car and you pull up a lease, it's part of the car lease.
Right.
Yeah.
And that's fairly new for people that have been living, that's been in their units longer than 2 years. For them to know that's a new law stating whether or not they have so much time to be evicted for just cause, when meaning they are not late in case the owner wanted to take back possession.
Right. Yeah. So if there is a form that you have to post from the rent adjustment program, I just posted one last week where it was one of my owners. I manage their property. They own another property that I don't manage, and they want to do a rent increase. And in Oakland now, in order to do a rent increase, you have to register your property. You have to sign a form that declares that you have registered your property. And you have to do that prior to doing a rent increase. And you have to post a form on the premises stating, what the form, what your rights are as a tenant in Oakland. It has to be posted on the property.
Okay.
I'm going to call on Miss President Rhea Cotton. She may want to add to that discussion. President Rhea.
Hi, good afternoon, everyone. Hey, Eric.
Hey, Rhea.
That point just led up to my next question. How are your landlords reacting to the rent registry one? And then also, I was doing an owner move-in, and they also on that form says that their business tax license needs to be current, and the rent registry to do a rent increase. How are your landlords taking to that? And do you have any audit process where they have to show that they're current on their tax certificate, or you just let them be their responsibility?
I normally let it be their responsibility. If I take on a new client, it's their responsibility. But a lot of like my son does all the rent registry, most of the rent registries for every property that we manage. That's a service that we provide. So he gets all the information, files it online. Like now it's late, but he just did one for, to answer I'm going to answer that question too. So one of my clients the same one who I just posted the notice, he wanted to raise his rents. He has low rents and he wanted to raise the rents. And then I told him, hey, did you register your property? No, I didn't. Okay. So we did all the paperwork, registered it. Did all the paperwork. And then I told him, well, did you do this before? Well, no. Well, you can't raise the rent on August 1st because you're not registered now. And so then what he said was, well, this property is for sale, so let's not register it and let's not raise the rent, and we'll cross that bridge. His hope is that we'll sell it and then it will become the next owner's problem. But my advice to him was, you should register it now, because if you don't and it doesn't sell and you still own this property, you will have the same problem next year. So, but he ultimately decided, to answer your question, no, don't register it. So some people react negative to it. I mean, it's a hustle. They're using it for two purposes. They're using it to make sure you pay your business tax. They're using it to make sure that properties aren't vacant. And if they are vacant, they're giving you the vacant tax. Oh, yeah, it's a big hustle. And it's a way to limit, just like what happened in this case. We are a very tenant-friendly city. Oakland is very tenant-friendly. So think about what happened. He was going to raise the rent, and then he decided not to raise the rent because of this law, or this rule. Well, I think that's the intended purpose. I think that they want to make it harder to raise the rent. They want to make you have to jump through more hoops just to raise the rent now, and only get 0.8% as of August 1st, 2025. So they don't react well to it.
We have a question from Miss D. Johnson. Dolores.
Good afternoon, everyone.
Good afternoon.
Question is, so say for instance, you have a fourplex on the market, rents are very low.
Mm-hmm.
Can the new owner come in banking the rent, since these people's rent has never been raised in 20 years? Can they bank?
They can, but the banking rule, and I told the guy yesterday that, it's a calculation. I just don't, I just read it the other day, but the banking is pretty poor. Maybe Rhea knows, but it's a formula and it's on the form. But yes, to answer your question, you can bank if the rent wasn't raised. So you're just like a tenant is, I like to tell this to owners. If there was one question I had to answer, if I could put it on like auto for owners, is most owners, at some point, an owner tells me, hey, you know what? I've been renting this tenant for this long, or whatever, for a year, whatever, 2 years. I want to, in their rent, I want to, in the contract, and I want to take possession of the property, or I want to just have them move. Well, guess what? It doesn't work like that in Oakland. So it's once they pay their rent for a year, it's to infinity if they pay their rent and, they're not paying the rent and they're adhering to the terms of the lease, then it goes on forever, unless you're doing an owner move-in, or you're doing the Ellis Act, where you're saying that I no longer want to be in the rental business. And then if you do the Ellis Act, you can't rent your property for another 3 years. I'm saying that to say that it works the same way for an owner. If I buy your 4-unit building, well, it doesn't mean, you're kind of implying that, oh, I'm a new owner, so I don't get to bank the rent if they didn't know. Yeah, you can bank the rent. As long as they told you, I'm stepping into that position. I'm stepping into the ownership position. It's not like, I own it now, so I can only charge you for this year. If the previous owner did not raise the rent, then you're the new owner. Just like they pay their rent to the new owner. I mean, they don't care who it is. You can sell the building 10 times. If they want to stay there, they just keep paying to the new owner. And you also have the right you have the rights of the owner that was before you. They didn't raise the rent for 10 years. You can do as much banking as the law will allow you. Does that make sense, Dolores?
It does. I mean, so to me, it's best to go ahead and bank it before this new rule set in August.
Well, yeah, we already, like, I had to tell him, like, my wife was laughing because we were coming from the store and I had to tell him like 4 times. And he was like, well, I can still do it now, right? I said, no, today is June 24th. If you give them a notice tomorrow, they have to have a full 30 days and it can only start on the 1st. So that means that if you do a rent increase today, you notify your tenants today, it's not going to start on July 1st. It's going to start on August 1st. And on August 1st, 2025, the amount of the maximum increase that you can do on August 1st, 2025 is 0.8%. You're already done. That goose is cooked. Now you can do the banking based on the calculation if they haven't, but it's not much. I just can't think of the formula, but it's right on the form for the RAB. If you go into the rent adjustment program under rent increases, it's a calculation for banking. But
Yeah,
it's not much.
it's for 10 years, but then next year they're changing it to 5 years.
Right. So, I mean, whatever that's what you can do. But, you can't, if they actually made it worse. Maybe, Rhea, do you know the formula? I just can't think of it right now, but it's a formula right on the RAP form.
No,
it's not much.
no.
So Eric, when you guys say banking the rent, what does that mean?
That means that if you're my tenant and you've been there for 5 years and all 5 years I've been a nice landlord and I didn't raise your rent, the next year I could say, hey, you know what? Based on the law, I can go back 3 years, I believe, and bank the rent up to a maximum. There's also a maximum. I think last year was 5.1%. So you can bank, but the maximum bank just means you can take the increases that you could have taken in years past up to a maximum.
Okay. So does anybody else I'd like to have a question, but does anybody else have a question for Mr. Eric Harris? Okay, so Eric, I'm a realtor, okay? And I want to, add another stream of income to my business. What's the first thing that I would do to get into the property management business? What's the first thing that you would advise me to do?
Well, if you're starting from scratch, are you buying a business or are you starting from scratch? I'm
starting from scratch. I want to get to the property management business.
Yep. Okay. Well, then you need to, first of all, you need to be a broker. Okay. You can't be a sales agent and own a property management company. Mm-hmm. And then you need to, put out your shingle. You need to advertise and say, hey, I'm in the property management business. And, you do that by, different modes of advertising, postcards.
Is there like any kind of courses that I have to take in order to be a property?
There's no course that you have to take in order to be, you other than being a broker.
Okay.
Yeah. You don't have to take a specific course in order to be a property manager. Mm-hmm. Now it behooves you to take courses when you become a property manager. But yeah, and then you have to, the other thing you have to understand is, I didn't get into this, but you have a trust account. So you're entrusted. This is a big deal. Mm-hmm. So the money is coming in from the rents, right? Mm-hmm. It doesn't go into your personal account. It doesn't go into your business account. It goes into what's called a trust account. And that has to be managed correctly. In fact, you can get audited. My second year, I was audited, and it's no joke. Everything's got to be squared away. You have to reconcile that account on a regular basis, monthly. So I have a software system called AppFolio. So AppFolio is a software system that I use. It's a property management software. That's how I pay my owners. That's how I pay my vendors. That's how I get paid, through the AppFolio software system. So it does direct deposit. I can do checks, but you're gonna have to get a software system. So and then you're gonna have to find a bank that does trust accounts. So my bank initially was Bank of America. Then Bank of America stopped doing trust accounts. So then I switched to First Republic. And then First Republic, if you know about First Republic, was bought by Chase. First Republic folded. And then now I bank with Chase. So, but it's got to do, another company is trying to get my business. I'm not going to do business with them, but there's a company called, you might, but they're called Column Bank. But they're supposed to, they're offering, they're like a new kid on the block. So they're offering more than a big bank is going to offer you. But you have to have a bank that is going to allow you to have a trust account. And that trust account is where the money goes for your owners. It's not your money that you pay the vendors with, you pay the owners with, you pay property management with it. So it's accounting, so every last day of the month, if you ever try to call me like on the last day of the month, and I may have been rude to people, or I may have been, I'm not rude, but that's my clearing day, so that's, I pay owners all throughout the month. Some owners want to be paid right after their rents come in. Some owners are paid in the middle of the month, but some of my bigger owners with larger accounts, they want it done at the end of the month. So sometimes at 11:59, I'm hitting execute, because that's when all the pay, that's when it's cleared. So it's I'm not gonna say it's a headache. You got to be, I don't know if you have to be accounting savvy, but you have to be, it's not like representing a buyer and seller. It's not like the normal business that we do. It's much more detailed. You have to be much more responsible with the money, because you're dealing with people's money.
Yeah, detail oriented, having systems in place. So
Yeah, you gotta have a system in place that will, I don't know, Rhea, what software program do you use? Do you use Appfolio? Or do you use?
She uses Enterprise.
No, that's the bank. I use Yardi, but
Yardi,
for my trust account I use Enterprise because they set me up with 3 accounts, and I go online. One account takes my rents, one account holds my escrow deposits, and the other account holds my net profit for the company.
Okay. So that's that third account is, and for me, that I have different banks. So I have, Bank of America, I have personal accounts just for my personal. Then I have my business account, which is with another bank. But then there's the trust account, which is with Chase. I don't do any personal banking or business banking other than my trust account with Chase. So, but that makes it easier. She has all 3 in one bank, and they probably offer a pretty good incentive.
Will says he also uses Yardi, and he banks with California Bank and Trust. Will, you had a question, Will?
Yes. How you doing, Eric? Hello, everyone.
Hey, Will, what's going on?
Do you leave your property management income that you receive in your trust account, or do you pay yourself out every month?
No, wait. Say your question again. So, well, let me answer this way. The money, I pay myself all throughout the month. So if, for example, if I do it, so my people, when rents are coming in on the first, whole bunch of rents. So on the first, my staff is going to they're going to code the rent into Appfolio, which is very important to code it correctly. But once it's coded in, then it's a deposit slip is made. And then it might have 20 rents, 30 rents, 25 rents. So once that's done, then I make the deposit. And then I can pay, before I pay the owner. And remember, I told you some owners are paid at the beginning. Like I have one owner, they want to be paid before their check even clears, but they want to be paid like right away, close to the first as possible. Well, before they get paid, the property management fees have to be paid. And it'll even tell me, hey, you're trying to pay this owner and the property management fees haven't been paid. So that reminds me. So then, I pay myself, I pay Maisel, and that's directly deposited into my business account, which is at a different bank. And then I pay the owner, which is directly deposited from the trust account to whatever their account is. Does that answer your question? But that happens all throughout the month.
Okay, so you do write yourself a check from the trust account to your business account every month?
I don't write any checks to Maisel. It's all direct deposit.
Okay, or it's deposit.
Yeah, so I do.
If you don't pay out yourself, technically you're the owner of the account. Is that problematic? Meaning, if you just leave all your money in the trust account?
No, that's problematic. That money. In fact, it shouldn't. There are rules. There are trust rules. You can't commingle your funds. Like the only way it could. Well, yeah. If I don't pay, for example, like right now, I paid a vendor through Zelle and my Zelle, and I haven't paid myself back from the company. As a carpet cleaning. So I'm gonna have to go into, so maybe that's what you're asking. There is money that's in the trust account right now. That's my money. But I have to actually execute a transaction. I can't, if I don't do it, it'll just stay there. Does that make sense?
Right.
So it hasn't been paid to me yet.
Correct.
So, yeah, but it's not technically my money though, until I execute a transaction. The trust account does, as far as the trust account knows, all this money is the owner's money, right? It's not my money. But if I put a bill in to an owner and say, hey, you owe me $100. Well, once I put the bill in, then the system says, oh, you owe Maisel Property Management $100. So pay them. And then sometimes I could put the bill in but not pay them, but it still shows in the system that that's a liability. Does that make sense? So I can say that I owe you, you're a vendor. Hey, Will did a service for Maysville Property Management, put the bill in, and then it's going to find out which owner, which property he worked on. And then it's going to say, there's a bill outstanding to Will for $100. And it's going to deduct that from the owner's money, even though you haven't been paid yet. Does that make sense?
Mm-hmm.
But it's going to show in the system that it's a liability.
But okay, so let me just give you my story. Okay.
Yeah.
Okay, we're not recording. All right, so I don't pay myself out every month. I just leave it there. So you're saying I should automatically? I mean, and I input it in the reports. I report what my income is, but as far as the trust account, I just leave it there every month. So you're saying I should be paying myself out every month?
Absolutely. Rhea, what would be the reason why you would want to leave your money in the trust account?
I just don't touch it. Yeah.
Yeah. Well, my recommendation to you is to transfer it to another account that is your account.
Because then you're auditing all that, right? If you get audited, you're auditing all that money. And
That's right.
And we had a
It's not an
question.
interest-bearing account? Because I know that was the main concern of the reason to have a trust account.
Yeah, it's good we're not recording. I'll just put it to you this way, Will. If you get audited,
Okay.
you're going to fail.
Uh-oh. Okay.
And we are recording. Go, 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 go.
Well, I'm just saying, you don't want to keep your money. That's commingling.
Right.
Okay.
Yeah.
So we had a question that says, do you reconcile work orders first before owner pays out?
So reconcile work orders first before the owner pays out. Yes. So if you do a job for one of my owners, then you put in a bill. It's an invoice. We input the invoice, and then you're either going to get paid that invoice, and normally people want their money as soon as possible. So that invoice is going to be paid out. But even if I don't pay you out, it's going to show, like I said to Will earlier, it's going to show in that owner's account that they have a outstanding bill. But it has to be input. So I spent a lot of time and actually started, charging my vendors, but I spent a lot of time, Rhea does a job, and then Rhea says, hey, Eric, I need to be paid $500. But Rhea doesn't do invoices that well. So I end up doing my people end up doing the invoice for Rhea for the job that she did. So I put that job invoice in the system, and now it shows in the system. If I pull up Rhea as a vendor, it's going to show, hey, Rhea's owed $500. But all Rhea did is do the work. She didn't do the invoice. But yes, we're going to, even if I don't pay Rhea, pay Rhea, then when the owner sees their owner statement, it's going to show an outstanding bill to Rhea, and it's going to deduct it from their net cash amount. Mm-hmm. Does that make sense? So yes, it's reconciled, but it only can be reconciled if it's input. If it's not input, it doesn't exist.
Right.
Yeah,
I got to go back to a question for you, Eric. I think this is when I was asking, what do you do if you want to start brand new? And somebody asks, where'd it go? Oh, something about if you work, what about working for a company as a property manager? So in other words, you don't start from scratch, but it says, what about working for a company as a property manager?
Yeah, I think that that's the way I started. So I started doing property management work before I bought this. So I knew, I just didn't start from scratch. Mm-hmm. So I knew about it, but it was a big, it's kind of like, what's the analogy? I just finished golfing, but you have to be able to drive, you got to be able to putt, you got to be able to have a short game. And it's kind of like working for a property manager is like you worked on putting. You worked on putting before you started golfing, but you didn't work on working with your irons, you didn't work on your drive, you didn't work on your hybrids. So there's a whole bunch of stuff that I had to kind of learn once I bought the company. So it was a lot. So, but it helped. I was just on when I worked for the property management company, I was just on the make contact with the tenant, try to get a payment arrangement, deal with irate people. That part was good, dealing with irate people and learning how to be calm and learning how to, support yourself when you're dealing with in difficult situations. That part was valuable.
I think that would be a good way to start, to be able to see all the ins and outs and all the pros and the cons before you just jump.
Right.
Yeah.
Right. Exactly. Yeah.
Dr. Ethel?
So for every client that you manage your property for, you have a trust account dedicated in your name, in your broker's name, but that trust account is really balanced for that particular client, right? You don't have
No.
all your different clients into one trust account, do you?
That's a concept that a lot of people I'm not saying they struggle with, but it's at the bank. There's one account, and in that account, in that trust account, there are my AppFolio software divides it up. It tells me it communicates with the bank, so it knows that Dr. Ethel has $5,000 in her account. Dolores has $3,000 in her account. Rhea has so it delineates who has what, but it's not a routing number and account number for each different owner. No, it's one account that is managed or that is divided by the software system that, and as far as the bank knows, they don't know about AppFolio. They know about the account. They know about and that's why it's important that, like, let me see if you guys can figure this out. If I pay you, or if I pay a bill for you and your account goes negative, what does that really mean? And the check cleared, the person was paid. What does that really mean? This is important in understanding property management.
They owe you money.
That's true. They do owe. But what does it really mean if
you mean reconciling your accounts, just like in QuickBooks? You mean like accounting terms, right?
Not accounting terms. If Maureen,
it also means they're in the red.
What was that? Who said
they're in the red? They're in the red.
They're in the red, but then I said that bill was paid. Well, where did that money come from if they're in the red?
Out of your money.
But pull from your.
Oh, now we're getting someplace.
It pulled from the master account.
It came from the master account. Now whose money is that?
I'm worried about Randy having his money in there, because Randy, your money could be getting pulled for somebody else's shortfall. And is it interest bearing?
So
ours is not. It's slight interest on this account, but I want to make this point.
Does it come from the reserves?
Well, no. Well, you can have reserves on an individual account, but I said my example is if the person's in the red, their account said minus. If I look at their account, I look at Randy's account and it says he's at minus 500, but the bill was paid. Where did that money come from? That's my question. Because the bill was paid and it didn't bounce. Where did it come from? This is important in property management.
Somebody else.
There we go. That means that it came from somebody else's money that's in the account. Now, did they give you authorization to loan their money out?
Oh, mingle their money? No.
No, they didn't give you. So that's why it's important that you don't have negatives. Because if you go negative, your trust account can have money. But if your account is depleted, if bills are still being paid, well, that means it came from somebody else's money.
Right.
And that's what you don't want to do. So that's an important understanding when you have a trust account. When you have a big account, you have an account that has all these owners' money. If you go negative on somebody's account, that means that money came from somebody else's money.
Right.
Which is my fault, ultimately.
We have a hand raised from President Rhea.
Go ahead.
Yeah, I just wanted to speak, just starting from scratch. And somebody had mentioned about working as a project manager. It's a big difference. So I partnered initially for my project management company. I partnered with a project manager to start my property management company. And I realized in that partnership that although she was a property manager, she did not know how to run a business. And the key to property management is knowing all the laws, reading that thick Department of Real Estate book, and knowing how to run operations. And that was like a key learning experience for me that I just wanted to share.
That's a great comment. And there's classes, like Dennis did accounting for 20 years, and there's a lot to know about how accounting works. And so I think anybody that's doing that should at least take one class. When I took that master's accounting, you don't need that much, but you need at least basics on what it means to balance an account and what it means to go in and out. So when you pull QuickBooks or what you're doing. So I think that's good to have somebody in your pocket that understands that. But one thing property managers often don't do is they don't give you online access. They give you a hard copy. So if anybody really knows accounting, they should make sure the property manager is the same in tune with them, like how to work, about going online. That's what I was asking, Eric. What do you use? AppFolio? How do you do the accounting? Like, which system? Because a lot of people use Yardi. Some people just like QuickBooks. What are you actually doing the accounting on?
That's AppFolio. So AppFolio, and then I have a third party who comes in and reconciles. I don't even do that.
We do our own.
So I have a Appfolio expert who actually was there when Appfolio was created. She's in a different state, but she's awesome. She's like a genius. But anyway, she helped me with my first audit.
Reconciling for everybody that hasn't done it. Dennis has done it, so I've been just doing that, and it takes a lot of time. So, so that's a good thing to understand when you're doing the books. Is it what Eric said? That's really important to know. Huh, interesting.
We're gonna have one more question before we wrap up. Mr. Will Wheaton had a question, and we're gonna wrap up.
Thank you. Quick question, Eric. You said you use a third party to do your bookkeeping for Appfolio. Is that an expensive undertaking?
Yeah, I mean, she's reasonable, but it costs money. It's not free. So every reconciliation, I have to pay her for every month.
Okay, is it based on volume or the dollar amount, or how is it?
It's based on the number of accounts that she does, and she kind of gives me a deal too. But she's been rolling with me for a while. But if we expand, then I imagine it'll be more. But yeah, it's reasonable, but it's an expense. An expense I don't necessarily want to have to pay. It's almost like when I go to the game, I want every seat around me empty. Right. But the people who own the team want every seat full. So we have different, so we have different goals, So anyway, it's an expense I don't want to pay, but I have to pay it.
Got it. Thank you.
Okay, Eric, one more because we have two Wills. One more for Will Hayworth.
One thing I want to mention about Appfolio is you have to have a minimum number of doors. I don't remember what the number is because I know I reached out. 14 doors. You got to have a minimum of 14 units. Let me put it in the correct terminology. So if you don't have 14, they won't let you sign up with them. Okay. Right. That was my comment. So my question is, when you have your own property that you own, do you still have to put them in a trust account if it's your own property?
No.
Thank you.
Yeah, I mean, it's your own property. So the trust account is...
But you manage it as well.
Yeah, it depends. If you want... That would be so to answer your question, Will, no, you don't have to put it in the trust account, but you may want to just for ease. You just happen to be the owner.
Right.
So it would make sense. My Appfolio software is powerful. So you may want to have that ability to look at work orders and look at make notes and emailing and texting tenants and all kinds of reports, expense reports. That's all in Appfolio. So you may want that for your own property. So for me, yes, I want it in Appfolio, but I'm just the owner of the property. But you don't have to have it there. You don't have to have it in the trust account. The trust account signifies, that's the name. You are entrusted with someone else's property. Mm-hmm. Okay. That's the whole point of having a trust account. So, but if it's your property, you can have it in there. It's just that you don't have to have it in there.
Got it. And is there a way to pass the cost along to the clients for the softwares? Because they are expensive, or we have to eat that ourselves?
Well, it's all relative. I mean, you can, as I've, I heard a seminar, as I've gotten more involved in property management, I took all clients at the beginning. I don't take all clients now. And then it's hard to kind of quantify, but you learn through experience, like what these costs are, like if Ria's my owner and she's calling me every day, you say but that's, hey, I'm Machiavellian. I mean, I don't want you calling me every day on this property. I mean, that's time. So you start to quantify your time. You start to, when people say, oh, can you lower your rates? Well, not, you might do it because you're just starting out, or someone who's doing, well, no, I can't lower my. In fact, what I say to people now is, in fact, I'm thinking about raising my rates. So absolutely no, am I going to lower my management fee? When I'm in court all day for a case, you don't see all that when you're starting out. If we have to go to a court for an eviction, I'm there all day, and, no one, they don't talk about that at the beginning. So to answer your question, as you get more experience, you're going to start charging people for your work that you do. That's what, we're professionals. You're not doing it for free, and if they're, you're going to start, I didn't used to charge a 10% for new clients. Any management, any business, any repairs that I arrange, I charge 10% of what I'm arranging. So if it's a $10,000 job, you pay me $1,000. If it's a $100 job, you pay me $10. If it's a $300 job, you got it. But I didn't do that at the beginning. So yeah, you can charge, and it's right on the form too. It's right on the property management form. A lot of people don't read the, how you can charge. Late fees. Late fees can go all to the property manager. How it makes sense is, who's doing the extra work when you're collecting late fees?
Right.
You are.
Right.
So you should charge for that. But anyway, hope that answers your question.
Well, we want to thank you, Eric. This was a great discussion, wasn't it? So to all my realtors, if you guys want to add, property management to your revenue stream, we can talk to Mr. Eric Harris. We have Will Hayworth on here that does it. President Rhea Cotton. We have Randy Munman. So you guys call them, right, and ask them. You guys pick their brains, right? What's the pros? What's the cons? As people take on very, very detail oriented business. But as Eric says, I get paid every day. 4 or 5 times a month, right? So please, contact me, and find out more about how, add property management to your revenue streams in real estate. So once again, you guys, I want to remind everybody that we have coming up our 77th annual NAREB convention in Los Angeles. Be July 26th to 31st. Make sure you are registered. I think that they have the hotels open, I think, until July 7th, I think it said, I saw somewhere. We got great guest speakers, Issa Rae, Lorenz Tate, 112, and my favorite, Eric, Marvin Sapp, is going to be there.
Oh, I heard that.
So you
I'll
guys,
be there.
make sure you guys are signed up. You have your hotels and everything, you guys, ready to go. We look forward to seeing all of you guys there in LA. And you guys, always remember, I'm gonna ask somebody, what time is it, you guys? What time is it?
A great day to be a realtist.
Thank you very much. Bye, everybody.